Hello, everybody. Jackson here with the Wealth Squad today. Talk about stocks once again. Thursday was a very odd day where the CPI report came out indicating that inflation was higher than expected. Of course, stocks took a dump right off the beginning, but oddly, they grew out of it and were in the positive in the net gain at the end of the day. It was a large move, and we'll find that here. So you can see exactly this is where the CPI report came in. Inflation was higher than expected, and then you can see we went all the way up 4.8% swing earlier yesterday, and then you can see on the 14th we start off nice and green, ended off bad once again, down 3%. We're not down to the very lows yet of 350. That's where the SPY and SP 500 was just yesterday morning. But most stocks are, flirting with it. You can see AMD here, not down all the way, but down most of the way. QQQ, same thing. Apple, same thing. Google, same thing. You can see Google was actually $95 early yesterday. Nike, same thing. Qualcomm, same thing. They all are above that yesterday's low, which is a good sign. However, once you see all this red and you realize this is not going to stop for a long time, that's when it gets scary. Like Amazon is back at 106 after being 142 just 2 months ago, right? August, September, October, just 2 months ago was 140. And during that time, you can see we are, let's do 6 months chart, right? So you can see right in the middle here. 6 months, you can see 429 down to 16%, where Google, on the other hand, past 6 months, doesn't show much of that gain. Both the SPY and Amazon showed a nice increase, but this is Google staying around the same price. Yeah, you could definitely see that. So it fell 16%, and Amazon fell from 140 down to 26%. So yeah, Amazon is hurting, guys. Once we could see Amazon below 100, I'd be interested in buying some shares. It's basically a powerhouse of a company. You have Amazon Web Services making up a lot of the growing and excitement within the company. And of course, you have the biggest supply chain in the world. So you have to ask yourself, why is Amazon trading at 100 versus trading at 188 just, last year at exactly this time? Well, of course, the economy has slowed down. Sales have slowed. You can see earnings have slowed definitely for Amazon. You can see last quarter they actually lost money. Make money. They're flirting with profitability, even though they're a $1 trillion company, mostly because they don't really care about profitability. They care about growth. They care about sales growth. Just recently, they're actually flirting with profitability. Most of the time, they're not. Earnings coming up in actually 2 weeks or so for Amazon. It'll be exciting to see what they come out with. And some other earnings coming out actually is Tesla. Tesla is flirting with a very low price. You can see October 19th, that's Wednesday. Tesla is currently at its 52-week low, down 7.5% just on Friday from the top of $400. Pre-split, so it's 3-to-1. So think of this price times 3, 600. This price times 3, that's 1,200. So we're from 1,200 to 600, we're down 50%, or 400 to 200. Down 50% from highs, still up quite a bit from that COVID low of 24. I don't think we're ever going to touch that. Who knows? With the way stocks are going, it's impossible to predict anything. But that's the market, guys. It's unpredictable. You see Visa 186, fell down to 174, but 176 is a strong resistance in support, so it generally stays around that price. And of course, earlier today hit that price, now back down to 182. Whatever, so be it. That means we could buy more at a good price. That's video, guys. I hope you learned something. The market's crazy. I hope you are staying out until it makes sense to deploy your money. And thanks for watching.